Hey everybody, Sami here from the Black Room. I hope you are having a terrific week so far. It has been said before that the market speaks loudest in failure patterns. The market speaks loudest in failure patterns, and it is so true that almost all of my trading, in some way or another, is based on failure patterns. I have on this watch list that I'm projecting the favorites list, the favorite gaps that I posted in the Black Room this morning. I create a spreadsheet every morning with all the gap ups, all the gap downs, and then the favorites, favorite ups, favorite gap downs. And I post this in the Black Room every morning at around 8:30 to 8:45 before the market opens. It is mostly based on daily failures. Let's take a look at the list. Just take a look. Etsy gapped over a base, but look at the last 3 days. What kind of bars did we have? Three red bars. Look at yesterday's bar. Big red bar on big volume. What does that tell you? Most people sold the stock and shorted it perhaps into earnings. I don't know if it was actually earnings or not. Probably was. But most people actually shorted it. So today when the stock gapped up, they are trapped. Get used to this word, trapped. Trapped. They're going to look to cover because they're underwater. Their covering is only going to propel the stock higher. Does that make sense? Etsy, GNC. GNC was clearing the base and it was clearing a long-term, multiple pivots, long-term pattern. So that's why I liked it. It ended up not clearing. So when I posted it pre-market, stocks move a lot in the pre-market. So sometimes they have to clear. If they don't clear, it's basically no good. So this one didn't clear. I actually played it today. I'll show you later. SEND is exactly the same as the Etsy. Three red bars and then a gap up. Over resistance also. Not only over this resistance, but over into a clean, clear space above, right? Over this pivot too. Twilo, the same thing. Those were the favorite four gap ups. Here's the favorite shorts. DXC. Look at the last couple days. Stock tried to, the last actually week or so, the stock stabilized. We see four green bars. So into earnings, people were probably optimistic, only to see their hopes crushed. And the next day, the stock gap down, right? And look at the move after the open. That's $5. That's probably more. That's $6 from high to low, from where it opened to the bottom. That's a $6 move. DF. Now, DF, if you look at it, let me open up the daily chart. DF is in a severe downtrend, right? Has been in a severe downtrend. And then over the last 2 months, 3 months, stabilized. Look at all these green bars. Look at yesterday's bar. That's people buying the stock. So when the next day the stock gaps under the entire base, what that actually means is every single person, regardless of who they are, whether whether they're institutional traders, novice traders, big traders, small traders, does not matter. Every single person that bought it was underwater today. So based on just knowing that, I can tell what the stock is gonna, I can tell in advance what the stock is going to do at least 80% of the time, right? Because here's what happens. You go to, you're in the stock long. Let's say you have just 2,000 shares, whatever, right? Small position. You had $10,000 in it, whatever. Next day, that 10,000 is worth, how much did it gap? Is worth, let's say, 8,000. Now you're down $2,000. Okay? And how are you feeling? Terrible. Not only that, after the open, the stock starts to drop. Your $2,000 loss is now 2,500, 3,000, 4,000. You sell. You're selling puts pressure on the stock. It drops. Other people also sell for the same reasons, and it starts the snowball effect. The more it drops, the more painful it becomes for people that are still holding. They sell and it drops more. Does that make sense? So that's the idea. DF, AXDX, AXDX. Okay, here's a rare exception. It didn't actually pan out. I thought this would be a good short. It got bought. So they don't always work, but the vast majority of the time they do. FTR worked, INFN worked, MDXG worked. This was hard to borrow. Unfortunately, it was a terrific gap, hard to borrow. Med was a terrific gap also, but Med is too wild, so I don't day trade it. I did swing trade Med here short in the strategic swing trader program. This was an official trade that made a lot of money. So this was nice, and over the last couple months, stabilized. Look at all these bars, and today gapped under all of that. Perfect. Except again, Med is not the most playable stock, so I stayed away. RRGB, okay, here's another failure. But RRGB also did not clear. When I looked at it, it was below the support. It ended up opening at support, so it doesn't really count. Z worked, beautiful. True worked. This is the against the backdrop of a really bullish market, right? I mean, the market was bullish, and look at all these shorts worked, with the exception of the RRGB, which again didn't gap below support, so that doesn't count. And then basically the only exception was the AXDX. You can't obviously catch them all, but I like to let the room members know which gaps are the best, because here's the gaps list from this morning. Okay, look at this. There were 44 gap ups and 34 gap or 43 gap ups, 33 gap downs. That's a lot. Who can focus on 70, 80 gaps? No one, pretty much. So you have to narrow it down to a few. And in the morning, I narrowed it down further to just really a couple. The DF and the FTR. I'll show you. Here's my P&L for today. Just gonna show you the positions. I didn't really, to tell you the truth, I didn't even trade that well today. But I tried a lot of things, as you can see, a lot of things. And then the problem is, with the shorts is there's that uptick rule. So sometimes you can't get filled, and sometimes you don't catch it at the right time, so you end up chasing it, then you jump out. But look at this actually. Look at this. This is my P&L. Look at the losses, guys. Look at the losses. Show me a loss. I mean, the biggest is this, $220. That's the largest loss. That's, by the way, the mark of a professional trader. They keep their losses small, and they maximize the winners. That's DF at the open. I'll show you the DF. But really, what I would like to talk to you about is FTR, because it's another failure pattern. So why did I focus on the DF first thing this morning? And INFN, and those are the three that I focused on out of the 8 or 9 favorite gaps, because these are highly liquid stocks that have no spread, also no jumpiness, no craziness, and I can get a lot of shares. Does that make sense? That's why I focus on these, not because they were the best gaps necessarily, not because they were the best gaps, but these are the more playable ones. Look at DF. We'll start with the DF because that was the first trade today. Look at this, 10 million shares. No spread other than the minimum 1 penny between the bid and the ask. Let me see if I can pull up the DF level 2 and show you. But this is after hours. This is what I'm talking about. This is the bid. Those are the buyers. That's the offer. Those are the sellers. 1 penny, right? Very, very liquid. It did 12.9 million shares, so almost 13 million shares today. So the DF had a base breakdown, if I recall correctly, off the 1 minute. I start the day off on the 1 minute chart because that's the smallest time frame. and I want to be in these as fast as I can with the setup. So here it is, opened a few minutes late or a couple minutes late. See, there was no volume on the first bar that tells me it wasn't open yet, right? And now it opened. Now I didn't catch it. I don't think I caught it here. I think I caught it at 650. Look at this, guys. 1 penny base. This is what's known as a one. This is 1, 2, 3, 4. 1, 2, 3, 4 pattern. It's like a mini breakdown pattern. Stock breaks down, then bases again. I believe it does. It did. Based again. Another breakdown. I'm in it the whole time. Look at this. Another 1 penny base. Lovely. In it still. Now, the truth is, did I get filled all my shares on the initial drop? No, because it was on an uptick, so I had to keep trying. So it was more than one order for the DF. Look at that. And then I got the widest bar, biggest volume, out at 603. Was that the low of the day? No, it wasn't. But I got out at 603. It dropped to 595. Yes, and it probably dropped even more later. Yes, it did. But that's the play. That's the pattern, is the stair step down, and then once you get the panic with the big volume, that signals short-term bottom, I'm out. The trade is over. Now, that doesn't mean I can't replay it later on, but that trade, the morning trade, is over. Beautiful. How many minutes was I in it? 20 minutes maybe? Look at this. 9:35 to 9:50. So, so 30 minutes. How much did it make? 5K. You saw it was the play of the day for me. But really, what I wanted to show you was the FTR. The DF was called live on the mic in the black room. FTR was also called, but I wasn't on the mic, so I typed it in. I think I wasn't on the mic. So let me show you the FTR. What is it based off of? Failure pattern. What kind of a failure? A breakout failure. Or you can call that a money bar or a bake and shake. The stock popped. Those are buyers. Look at this. 500,000 shares. I can't read, it's too bright. 393,000 shares. Went long, the DF, the FTR. Let me show you maybe the smaller time frame. That's the 5 minutes. Let me show you the 2 minute maybe. It should be a green bar that got negated. See it? That's it. And it got negated. So the FTR was a short under the doji bar, under 425 by 424 by 430. And then also posted under 420 because it's based into the declining 20, stop 430, and then covered at 406. Okay, no, covered half at 411. There was a little pop, big volume also, covered half, and then the back half I was bidding for it for like 20 minutes at 405 at the end of the day, but I didn't get filled, so I just covered it at 406. That was the trade. Okay. INFN, I also got involved in the morning, but it didn't really go anywhere. It pretty much didn't go anywhere today, INFN. Why? It was a very large gap. It was like a 30% gap. So it ended up not. Sometimes large gaps, they don't go anywhere. So this didn't go anywhere, but that's why I focused on these and not the other ones, some of which I might have liked more, like the med. I love the med. I really, really like the med, but too wild for me. I try to be very professional about what I do. If I can't control my risk, if I get into a stock that's jumpy, wild, crazy, and I can't control I can't trade it. If I cannot control my risk, I can't trade it. What does that mean? I can't control my risk. It means I can't get out when I want to. I may not get filled. It may skip me. That's what it means. The spread is too wild. Just getting in it and absorbing the slippage or the spread on the way in and the way out is too much money wasted. That sort of stuff is not my style. There are some hot shots out there that might be good at it. I stay away from it and I focus on the things that I feel I have control over. I can get out whenever I want to. All right, does that make sense? So just a video about failure patterns, mostly gaps, but also intraday failures I use for entries. And then, again, I don't like to trade this much, but the truth is, in the afternoon, most of these came in the afternoon, prices didn't go anywhere. The market moved, But if I show you the stocks that I traded, they didn't go anywhere at all. So they didn't generate any money, any gain or loss. But the morning trades made most of the money. All right, guys, I want to keep this. I don't want to. I don't want the video to drag on. I hope you enjoyed the video, found it educational and beneficial. If you would like to learn more about gaps trading, there's an incredible course that I highly recommend that T3 Live offers. I put a link to that course in the description of the video. And if you'd like to participate in some of these trades, uh, join the Black Room. One trade pays for the whole year worth of subscription. A lot more, obviously, if you end up with a P&L like this. And this is, as you know, this is not the biggest I've had recently. I've had $18,000 days, $17,000, $14,000 days. Um, so, so if you'd like to, let me see, if you'd like to participate in some of these trades, here's an $18,000 day just on 1031. How about the day before? 6,066. How about the day before that? 8,000, right? How about the day before? 14,000. You know, I don't want to keep going, but you get the point. Those are consecutive days. So one of these days pays for the whole year, 2 years, 3 years worth of subscription. So if you'd like to check it out, I also have a link for that in the description. Or you can reach out to customer service at T3. All right. Thanks, everybody. Have a wonderful evening and talk to you soon. Take care.